Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently approaching a quite significant level of previous monthly resistance from which all this rejection to the downside was created, which the market had then broken to the upside. And after a break above previous resistance, what we know is that that previous resistance level actually becomes support. So what the market is actually about to test here is a quite strong level of previous monthly resistance that was turned support here. And since the market is currently approaching it from above, it's still acting as support. So there is the possibility to see a potential reversal to the upside away from this support level. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, we can notice once again how strong this zone is. It was acting as very strong resistance, blocking the market during this move to the upside and making it reject to the downside. Again, here it started acting as resistance. Then we had the break above the zone and it was respected as support here. And in the moment the market is approaching exactly this same level, from which there is definitely a possibility to see a test and then a rejection to the upside away from this zone, because essentially we have good probabilities of seeing some institutional longing going on inside of this area. We can also notice, if we move back to the monthly time frame, that from a pattern perspective, we essentially have an impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we also have the 0.786 Fibonacci retracement lining up exactly inside of this area, creating a confluence of support that we could in fact expect this market to test and then to reject to the upside. Going down on the daily time frame, what do we have? Now, from a daily standpoint, everything looks quite clear because we can notice how increasing this move to the downside into that monthly and weekly support area that we have just identified. Also here on the daily, the market is melting to the downside with the creation of a bullish pattern. In fact, increasing this move to the downside, the market is creating an overextended M pattern. We can see from here, up, down, up, down. After the creation of an overextended M pattern, what we would expect is for the market to create a rejection to the upside. Specifically, what we would like to see is for the market to create a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this high to this low, meaning that we could expect the market at least to create a correction to this area, but potentially even higher all the way up for a retest of this previous daily support that was acting as support here and again support here, which is now turned resistance. So there is a good probability to see a potential move higher into this area for the completion of this M pattern, if we will start to see some institutional longing going on inside of this area, which at that point would further increase the probabilities of this potential move higher. Now, why do I speak about institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for the pound, we can see how with the last reports, we haven't really seen a strong increase of the net positions. Actually, net positions got decreased. So institutions are still adding shorts and closing longs. Now, it is true that overall, we still have way more longs than shorts. We have 97,000 longs compared to only 48,000 shorts from an institutional perspective. However, in the short term, net positions got decreased, making GBPUSD weaker because institutions have been shorting it, and in fact, the market has been moving lower. So it will be very important to see if we start to get some institutional longing of GBPUSD inside of this area with the new reports, because already they have more longs than shorts. If they start to add even more longs and close shorts inside of that monthly and weekly support area that we have just identified, which is a thing that has good probabilities of happening, at that point, that would even more increase the probabilities of a potential rejection to the upside away from this area. So if we start to see this institutional longing, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market that we would have to the intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the market to go and complete the overextended M pattern, at least at the 0.32 of the Fibonacci taken on the daily impulse leg. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97, one-time payment. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it.
If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.